Hey guys, John Paulamy here, Actionable Intelligence. Today is Sunday, April 13th, 2019, and as I look out my window here in Chicago, I see a lot of snow coming down, middle of April. And quick comment, I'm going to talk about it more next week, but there's becoming more and more data is starting to suggest that the so-called warming that was going to happen isn't really happening. And one of the arguments I've been making is that we are in for a long period of cooling on Earth. This will have ramifications in energy, food production. I'm not a one of these people that panics and says we're going to have a new ice age, but you only need slight changes in temperature and weather that can drastically affect agricultural production. The fact remains that one of my theses for investment going forward is an increasing population but less arable land per person. So if the great yields and great growing conditions we've experienced over the last 10 years or so now go in the opposite direction, and we have actual weather events that cause crop failures or lowered production, this is going to be a problem, and it's going to raise food prices. In addition, obviously if it's colder, you're going to have an increase of energy consumption. I just think that we're looking at an overall shift in climate here, but not the way people think. I'll be talking about it more next week. But speaking of energy, like I said, I like to follow certain people on Twitter, and one of the people I follow is Eric Nuttall. He runs 9 Point Partners. It's a Canadian-based energy investment firm, if you will. And this is a graph that he put up recently. He's a frequent contributor or guest on BNN, which is like the CNBC of Canada. But anyways, this chart shows the free cash flow yields at certain oil prices and certain differential prices, differential being the difference in price between West Texas Intermediate and Western Canadian Select. So if certain assumptions are made in his models, basically you see what the potential cash flow yields are at certain companies. These are mostly Canadian, these are all Canadian based. You can look the tickers up yourself. These are Canadian based oil companies that have really been in the dumpster based on not only lower oil prices and what happened in 2018 in the fourth quarter, but the government in Canada trying to strangle the oil industry by not allowing pipeline builds and things of this nature. But suffice to say, as oil prices have recovered, you can see, for example, Meg Energy at $65 a barrel oil has about almost a 50% cash flow yield. So what we're basically saying is the market cap of the stock, the cash flow is equal to 50% of the market cap. So what can you do with free cash flow? Well, you can do a lot of things. A lot of these companies have a lot of debt, and I actually recommend a few of these companies, one in particular in the newsletter, and I own several of them. But a lot of them are heavily in debt, so you have to watch when the debt matures. And some of them have debt maturities that are out 4 or 5 years, which makes it manageable. So one of the things you can do with your debt, with your free cash flow, is you can pay down debt. You can buy other assets or companies. You can pay a dividend. You can buy back stock. So one of the things that Eric Nuttall's been doing is going to a lot of these companies and basically saying, listen, even if you don't do any CapEx over the next couple of years, you have sufficient cash flow, you could buy back significant amounts of your stock. If no one else has an interest in these companies, if no one else cares about them, if everybody else has left them for dead, the managements should be cycling cash flow back into stock buybacks. So some of the companies have taken them up on this. Regardless, being a contrarian, being somebody looking for deep value, I mean, these companies have actual assets. They produce a product that is needed, oil, and eventually these numbers, these cash flow yields are going to be recognized. And I think we're starting to see the beginning of that. Let me show you a couple of charts. Here's one of the companies that was mentioned in the previous graph, but this is Athabasca Oil, and you can see in the last week or so the stock has really broken out of its downtrend. We've seen this across the board. If you go and look at a lot of these charts for a lot of these companies, you'll see the exact same thing. Here's another one. This is Baytex Energy. You can see it's kind of breaking out to the upside on some decent volume. I guess what I'm trying to say is that it looks like with the oil prices where they're at, if they stay at this level or move higher, which I actually expect them to do over time, I expect to get up to $70, $75 a barrel later on this year with West Texas Intermediate, as OPEC continues to restrict production to bring the oil market back into balance. I think the recognition is going to come that these things produce a tremendous amount of cash at these levels and that they're extremely undervalued. And I think we're starting to see recognition of that all across the oil industry with the news we saw last week where Chevron agreed to buy Anadarko for $33 billion in stock and cash. So, you know, we've seen a lot of these oil and exploration companies and major oil companies, they're more cashed up than they've been in years. Even though the price isn't $100 a barrel, they've cut costs so deeply and they have restricted investment in new exploration and production that cash that they are generating is going into the bank and not being spent. So I think that, as we pointed out in previous videos, the lack of investment of cycling cash back into finding new reserves. Remember, again, I've said this probably 10,000 times, this is an extractive industry. You have to find new reserves for the reserves that you've produced, or at some point you go out of business. And we actually showed that in a chart either last week or the week before where the reserve life indexes of these companies has been decreasing over the last 5 years. So with valuations so cheap and energy being so in the dumpster, it may be easier and quicker to replace reserves by just going out and acquiring reserves in the stock market. And we've seen this before in other oil cycles. This isn't the first time this is happening, but I think that this may be the kickoff of some more mergers and acquisitions, which would bring attention back to these companies. It would get analysts start looking at what's the next domino to fall? What's the next company that's going to be acquired? I think what's interesting when reading the news about the Chevron acquisition of Anadarko, the fact that Occidental Petroleum was also involved in the bidding and I guess actually offered slightly more. I don't know the exact context, but it kind of makes the point that a lot of these companies want to find more reserves. Reserves are cheap on the stock market. I think we can expect, hopefully, and it could happen, it appears to be happening, that we were going to see a mergers and acquisition wave in the energy oil patch. So that would be good for us. Okay, moving on to uranium news. I guess the big news for this week, a couple things I want to talk about. Just the yellow cake, which is similar to uranium participation. This is the yellow cake being the London-based, basically holder of a uranium yellow cake. They go out and buy it in the open market. They have raised additional capital, about $34 million. They're going to buy an additional 1.1 million pounds of uranium from Kazatomprom under an existing agreement that they have. I think it's just indicative of the value that exists in this market. I mean, we keep talking about it. I know everybody's getting antsy, rubbing their hands together, but I just keep buying my favorite stocks. I just keep nibbling away, adding to my portfolio. This is the highest conviction trade I've ever had. It's the most obvious layup I've ever seen. Barring another Chernobyl or Fukushima, I just don't see any other outcome except the fact that uranium is going to move to very high levels. I think what people keep missing is the fact that, again, uranium mining is an extractive industry. The amount of reactors online and coming online is growing. They are upsizing power plants. What they're saying is they're putting bigger steam generators in, bigger steam turbines. They're able to generate additional electricity, requires additional uranium. The new reactors that are coming online are 1,000 megawatts or larger. I mean, the news that China is going to build 6 to 8 reactors over the next 10 years, making 66 to 88 or 60 to 80 additional reactors over the next 10 years, and the fact that China is going to stockpile uranium to ensure that they have the fuel to power those reactors. Folks, there are no new uranium mines coming on. There has been no significant investment in this sector. There is going to be a huge air pocket once people wake up and say, where is the uranium going to come from these mines? And that's when I think you're going to see an overshoot. That's where I think you're going to see it to the moon. I mean, to steal a Robert Friedland, mining billionaire Robert Friedland, what he said about copper, I think also applies to uranium. You're going to need a telescope to see how high the price goes. And I don't say this to be with hyperbole or to be a pumper, but I mean, guys, after Fukushima and the price collapsing of uranium, there was no incentive to bring on new production. Nobody was investing, but people were continuing to produce. The reactors continued to run. So we have this every day or every month, every year that goes on with no incentive pricing being there to incentivize capital to go and replace the reserves that are being produced. At some point, with reactor growth continuing, there's going to be that day of reckoning. So I think this one Yellowcake states it very good in the third bullet point. Underinvestment in new uranium exploration and development has resulted in a production supply gap, which is currently being met by secondary sources and inventories, with supply deficits expected to arise in the future. I mean, that just about sums it up. And the people that have the patience, the people that have done the research, the people that understand this market, the people that have conviction in their research and in the economics of this industry, I think are going to experience life-changing wealth creation. Now, it's not going to happen over the next year. It's probably going to take a couple years for this thing to play out. We've said that before. You know, people are saying, well, you guys keep saying this. And I mean, well, tell me what the bear case is. Tell me why uranium would go down. Tell me why it would stay down. And people can't do that. They're just, you know, there's a mental block for most people. They can't just sit on a position. They have to do something. They want some action. Well, you should get on a plane and go to Vegas. Southwest has flights several times a day from major cities. You should go there with a couple grand and get the gambling instinct out of your system. What you should be doing is continue to identify and purchase and stockpile good uranium mining and exploration companies for the inevitable increase, the inevitable shock that's going to come to this system when the realization sets in that there's not enough uranium to supply all these reactors. Talking about Section 232, I know that keeps getting talked about ad nauseum. I don't really talk about this. I think that the Trump administration has demonstrated they are nationalistic, they are pro-American. They see, it's been explained to Wilbur Ross and Secretary Perry and Trump by the industry that, you know, 20% of the electricity in the United States is produced by nuclear power, and we produce less than 1% of our uranium fuel. That's not a tenable situation for those gentlemen. I don't know the exact outcome. I don't want to speculate, but I would suggest that based on what we've seen from them, the discussions we've had, the Trump administration backstopping the Vodal nuclear build, you know, and Secretary Perry talking positive about nuclear power, Bill Gates lobbying Congress about nuclear power, I think that we're going to see a positive outcome. I'm hopeful that, as many people have commentated, that this will lift the cloud of uncertainty over the industry, and then we can get back to normal contracting and price discovery of what really the price of uranium should be via long-term contracting. So that's what I have to say about uranium. A couple of final thoughts for this week, guys. I really like Goring and Rosenzweig's website. They are a natural resource investor firm. They specialize in natural resources. I would really suggest that you read their quarterly commentaries. They just came out with the Q4 2008 Natural Resource Commentary. They talk extensively about the oil market. They talk about what's going on in India with copper, the inflection point that India is reaching with commodities that China had, 15 or 20 years ago. It's now happening in India with a population of well over 1 billion people. I think that people are underestimating India. It never gets talked about. China, China, China. That's all we hear about. And India steaming along at 7.5% growth every year, with the Prime Minister Modi there with a big push to electrify the country and all the productivity gains that come along with that. It requires an intense amount of copper. I actually did a video about this about a month ago, talking about how much copper is required for all the substations and transformers that are needed to electrify the country. Another bullet point here, Harris Kupperman, a guy I respect quite a bit. He's a hedge fund manager, runs Praetorian Capital. He lives down in Miami. He also is the chief executive officer of Mongolia Growth Group, and he writes a blog called Adventures in Capitalism. I would suggest you subscribe to it. It's free. He has a lot of great ideas. He talks a lot about shipping stocks, and one of his major position right now is Scorpio tankers. I'll put a link to the article that he wrote about, and also an interview he recently did where he talks about why he has such high conviction for this. Kind of spills over to some of the shipping stocks and the ideas I have around shipping with regard to the stocks that I hold in the Actionable Intelligence Alert newsletter. Another thing I would encourage you to do is follow me on Twitter. You should get on Twitter because there's quite a few smart people in the uranium space, in the natural resource space, value investors that I kind of follow, and they follow me, and it kind of cross-pollinates, and you pick up a lot of great information, a lot of great ideas. If you're not on Twitter, I'm not saying you have to get on there and you can lurk, you can follow people and just come in your feed these different articles and comments. I think it's very valuable, so I would encourage you to do that if you're not already doing it. So lots of great information there. Kind of build a contact list of smart people. I like to follow smart people. I want to identify people that are smarter than me, people that think outside the box, people that are second and third level thinkers. I mean, you can't think it all up yourself, guys. So it's a valuable resource. I mean, we don't get into the cat videos and pie in the face videos. Just kind of stay away from the political stuff, but mostly focus on natural resources, contrarianism in investing, and valuations. So if you get a chance to do that. I would also point out I have to get a plug-in for the Actionable Intelligence Alert newsletter. $79 per year, 12 issues, full access to all the previous issues. If you're interested in the ideas that we're talking about in these videos and how they manifest in stock ideas, that is the vehicle to take a subscription and get an idea of how we're investing in real time, talking about these ideas on these videos. So that's it for this week, guys. Appreciate the support. The channel continues to grow. Please, if you want to help me out and don't want to subscribe, at least like the videos, subscribe to this channel. I appreciate it, and I look forward to engaging with you guys in the comments and answering any questions or having some dialogue. Thanks for listening, and we'll talk to you next week.